Hello, everyone. I'm Meher Walia, and welcome to Finding Finance, the podcast where we delve into the different subfields of finance. This podcast aims to help high schoolers who are contemplating a career in finance and business understand the different paths in the world of finance and help them find which path interests them the most. David Michaels is our esteemed guest today. Mr. Michaels is the founder and managing member of Physicians Financial. For over 25 years, Physicians Financial, LLC, has been the go-to resource for doctors and dentists nationwide. Physicians Financial serves medical professionals in all sectors of the healthcare arena, from independent practitioners to the top practicing physicians at the largest hospitals in America. Our conversation today will focus on insurance, and specifically life and disability insurance. I hope you enjoy our conversation with Mr. Michaels. Mr. Michaels, thank you for joining us today. It is a pleasure to have you on the show.
Thanks for having me. Pleasure to be here.
Let's rewind a bit. Where did you grow up? What kinds of things fascinated you as a student?
Well, I was born in the Ukraine, grew up all over the place within the New York area, from Brooklyn to a little bit further upstate, to Merrick, Brookville, and so a little bit of everywhere, but New York.
Wow, so a little here and there.
A little here and there, definitely.
What kinds of things fascinated you as a student? Any particular subjects?
Business, entrepreneurship, before it was really known as entrepreneurship these days. And growing up, I had quite a few side hustles, if you will, from caddying to little businesses and things of that nature. But business was always my interest.
Did you have any hobbies, such as sports?
I wasn't especially athletic, so more watching than playing. Yeah.
For undergraduate school, you attended St. John's University as a RIM Scholar and Spencer Scholar, majoring in risk management and insurance. What inspired you to major in risk management and insurance?
Well, the inspiration was, at that time, less so risk management and insurance and more so the ability to go to school on a full ride. So I kind of took advantage of that. And I wanted to do something that was focused in nature from a major perspective, hence the risk management.
Were there any other specific fields in finance you were interested in?
Economics, from a macro perspective, was definitely of interest. Marketing as well.
Later, you went back to Wharton in their advanced finance program. What drove that decision, and what did you take away from it?
Great question. So many of our clients have been dealing with private equity from a sale of, or a potential sale of, their medical or dental practice, and I felt that my knowledge base was rather limited. So, what better place to gain knowledge than from the awesome faculty and professors at Penn, hence that endeavor.
So it was to gain more knowledge in a emerging type of practice going on.
Right, to better help clients with financial planning and things of that nature. That was the main impetus.
I see. So let's move on and talk about insurance. What exactly is insurance?
Well, so insurance is the transfer of risk from individuals or businesses or government entities, for that matter, onto an insurance companies to reduce exposure.
And when you talk about risk and risk management, can you explain what that means in this context?
Sure. So risk management is the process of identifying, assessing, and prioritizing potential threats and opportunities to organizations, whereby we determine, or organizations or individuals determine, whether we're going to reduce the exposure, the threats, whether we're going to avoid, i.e. not do said things or said acts – or business practices, perhaps transfer right? Which is insurance, the transfer of risk, or just accept the risk, which is continue doing whatever business activities or personal activities we want to do, understanding that there still is potential loss.
So there are different types of avenues you can take.
Right, right. So risk management in and of itself does not mean insurance. Most people do put risk management insurance into the same category because most of risk management is the mitigation or transfer of risk, which is insurance. But there are many, many risk management techniques that reduce risk. So just as an example, someone that wears their seatbelt, they're employing a risk management technique. They're reducing risk by wearing a seatbelt. So if something happens, right? Sprinklers in a building, right? Mitigates risk if there's a fire, things of that nature, right? Driving at the speed limit mitigates, right?
I see. So what role does insurance play in people's financial lives overall?
Insurance is an integral component in people's financial lives because from a financial planning perspective, the objective is to first build a base, no different than if someone is building a house or a building, you first build a foundation, then the first floor, then the second floor. So if you don't have a solid foundation, i.e. protection, then everything else could crumble. So insurance does play a pivotal role.
We often hear about health, auto, property, and life insurance. How do these different types of insurance compare?
So there's many, many differences, of course, between the different types of insurances. So auto insurance, property insurance, and liability insurance fall into the category of property and casualty insurance. And the second category of insurance are defined in the benefits category, life, health, disability. And the auto and the property and the liability insurance, for the most part, when people go through their lives, they change those insurances frequently, and those insurance companies, for the most part, are able to cancel or increase people's rates correlated to losses, right? So, you always hear someone gets into a couple accidents, the insurance drops them. Contractually, the insurance is written in a manner that allows the insurance company to do so. With life and disability insurance that folks buy personally, generally speaking, there is vetting to get said policies. They have to prove good health and they have to do things of that nature. But once they have a policy or policies, the only way the insurance company can cancel on them is by the policyholder not paying the premiums. So property insurance, car insurance, liability insurance, very easy to get. There's no vetting per se, but also very easy to be canceled. Whereas disability and life insurance, and in some states health insurance, there is vetting. So one has to qualify. So getting in is tougher, but once you're in, the contract stays with you.
So the asset you're trying to protect in auto, property, insurance is more tangible than life, disability.
Correct. So with auto insurance, you're protecting the asset, which is the car or the truck or what have you. The biggest exposure is the liability component. So when someone gets into an accident, yes, they may damage someone's car or their own car, and there's a finite cost to said damage, but the bigger damage, monetarily speaking, is the liability, the pain, the suffering that many times ensues as a result of that, and that's defined as liability. With respect to life insurance, there is something called human life value, and depending on someone's age, their human life value is 20, 30, or 40 times their income. And so that's one way to value what someone would need for life insurance. With disability insurance, you're protecting or someone protects their most valuable asset, which is their ability to earn an income.
So two distinct differences.
Two distinct differences, correct.
How do insurance companies actually make money while still protecting these policyholders?
Right. So there's many different categories of insurance companies. The two main categories are there are stock companies and then there are mutual companies. Stock companies are in existence to make a profit for their stockholders, for their shareholders. And like any other business, they operate to make a profit. So they have to collect enough premium dollars, enough money has to go into the cookie jar to be able to pay for claims and to make stockholders happy. Then there are mutual insurance companies, mutual life insurance companies, as an example, and they're owned by the policyholders. They also have to, of course, collect appropriate premiums to make a profit for their policyholders, right, in said mutual company. So those are the two main structures for life and disability companies. For car insurance companies and property and casualty companies, the same applies. It's just sometimes there's a little bit more money that's made on what's called the float, whereby they collect the premiums today, earn interest on the premiums, make money on the investments, and hope not to pay out claims until a later period of time. So depending on economic conditions, indices, et cetera, right, there may be some money made, and no different than life insurance, right? So there's different modalities in which the companies make money.
So now we understand what insurance is. Let's dive into life insurance. What is life insurance?
Life insurance, in the most basic way, protects from premature death or delivers cash, delivers death benefit to families or businesses in the event someone passes.
So why do people buy life insurance? And at what stage in life does it usually become important?
Right. So people typically buy life insurance because they either love somebody or they owe someone money, right? So if they have families and they want to take care of their families, their kids, their spouses, et cetera, they may buy life insurance to protect the families in the event that they die prematurely. Or if they borrow money from a bank, sometimes said bank requires that they have life insurance that will be paid out in the event of their untimely demise. At what stage in life do they buy it? Folks should buy it as early as possible because the younger they are, the less expensive it is, the healthier they are. Some people follow that mantra, and others do what they do, which is they buy it when they decide to buy it or when they're referred by their friends or their colleagues to buy it.
What are the different types of life insurances, and how do they differ?
So the two basic types, and there's lots of different nuanced policies, but there's permanent insurance and there's term insurance. So permanent insurance is akin to owning the insurance. Term insurance is akin to renting. So a good analogy and a good way to look at it is you could rent the insurance or you could buy the insurance. It's not that one is better than the other. People at different stages in their lives, depending on cash flow, depending on income, depending on circumstances, do different things. No different than real estate. It's not that renting is worse than buying or buying is better than renting. People do things at different times in their lives to correlate with their business and their family needs.
It's what makes sense to them.
Exactly.
Based on their situation, scenario.
Exactly.
Can life insurance also play a role in financial planning and investing beyond just coverage?
It does. So the permanent insurance that accumulates cash, and insurance that's there for the life does play a role in some people's financial planning because it gives them the ability to potentially spend down other assets in retirement, knowing that assets are going to be replenished vis-a-vis life insurance. Sometimes life insurance is used as an asset class with regard to, acting as a bond. So there are different ways that life insurance can play a role depending on people's situation and what's important to them.
I see. So you are the founding and managing member of Physicians Financial. What does Physicians Financial do?
We help doctors and dentists and their close friends and their parents with investing, with insurance, both from an implementation standpoint and an advice standpoint. And we're essentially the financial quarterback. We're on speed dial for lots of folks to help them with various things.
What does your day-to-day role look like?
Helping clients problem solve.
So you're also involved in disability insurance. What is disability insurance?
Disability insurance is insurance that replaces or is meant to replace a paycheck if someone is too sick or injured to work.
Why do people need it?
Because for most people, their most valuable asset is them, their ability to generate an income. And if they can't generate an income, everything else falls apart. So it's the most valuable asset. People don't sometimes look at it that way. People look at their car or their home. And although those items are big ticket items, if their income ceases to exist, those things can't be paid for. So disability insurance is super duper important.
That's true, because as you said, if you can't work, then no income, and then you can't even pay for a car, your house, so other insurances go down the drain there. What are the key characteristics of disability insurance that people look for?
So a few characteristics that they look for, especially within the physician space and the dentist space, is having a policy that's what's called occupation specific. So if someone is a surgeon and they can't operate, but they still are physically and cognitively able to do other stuff, the objective is still to get paid if they can't do surgery but are able to do other stuff, not because of greed and not to be opportunistic, but folks that have advanced degrees and spent many, many years getting to where they are, there's an opportunity cost of getting there, i.e. residency fellowship. So if some bad stuff transpires and now let's say they're not operating or they're not doing procedures, then they're teaching or they may be doing something else, but their income likely is going to be less. So one key characteristic is occupation specific. Another key characteristic, which is nice to have, some people are able to get it, some people are not, depending on their health, is the ability to increase the insurance over time as income goes up, but without having to go through medical vetting. So a young guy or gal that gets a policy when earlier in their career and maybe they're making less money, it would be nice to have the ability to increase even if their health changes. Other characteristics are such that something called non-cancelable guaranteed renewable, whereby the insurance company isn't allowed to change the premiums on them. The insurance company is not able to cancel on them. So to have as many pro policyholder provisions. And of course, inflation is important because, the cost of milk and everything else goes up.
Along your career path, you must have experienced success and challenges. Can you share a time when you saw firsthand how life insurance made a major difference for a family?
Sure. So unfortunately, there's more than one scenario with respect to life insurance and even more scenarios with respect to disability insurance. There are quite a few situations where in the absence of there being a significant infusion of cash, infusion of money into the household, a few families that I have in mind would not be able to raise their kids, send their kids to college, and do all these other things. So, being in the business for over 2 decades, unfortunately, there have been, a fair number of claims. The fortunate thing is these families were helped, and you take a terrible situation, and life insurance doesn't help, or disability insurance doesn't help bring that person back, but it helps their family live in dignity post bad event transpiring.
So it does play a crucial role, given
Correct.
life is unexpected.
Exactly.
On a lighter note, how do you spend your free time? What are some of your favorite hobbies now?
Playing tennis and getting bossed around by my kids. Not in that order. And traveling a little bit, with kids and without kids. And
Did you recently watch the U.S. Open?
I did.
Yeah, good matchup between Alcaraz and Sinner in the final.
Absolutely.
Yeah. So now, for the question I ask every guest on my podcast, for kids in high school and college looking to enter the world of finance, what advice would you have?
Finance obviously is very broad, but the advice that I have is to work hard and be gritty and have work ethic, because someone could be super, super smart, well-read, and intellectual, but if they're not hitting the pavement, if they're not gritty, if they're not trying to go out there and get it, opportunity will pass them and they will never get there. So work hard, be interested, do internships, and go out there and get it.
Thank you so much for
My pleasure. Thank
taking
you for
us
having me.
into the world of insurance and specifically life insurance. Your advice was very insightful and thoughtful. We really appreciate you
My
being
pleasure.
here.
Thank you so much.
Thank you for listening.